Malcolm Davidson is Hull's money man. With house prices falling and interest rates going up, it's a time to have a look at the whole housing market. Perhaps is it a good time to move? Is the market stalling? And I guess that depends to an extent, Malcolm Davidson, where you live, because there will still be some areas that are reasonably resilient.
Oh, definitely so. And I know you just played tragedy as about our intro, but it's not perhaps quite that bad. It might be for some people, especially those people who's have got the mortgages coming for a renewal this year, and that story's been in the news for quite a while. What we see in the property market is a market of two halves, really. So at the top end of the market, that is very slow. And the reason for that is when people are looking at moving up the property ladder, they're always in two minds about it anyway, because you're buying that bigger house, it's more expensive to heat, and you're committing to a bigger mortgage normally. Now, at the moment, that bigger mortgage has got a higher interest rate applied to it because of the Bank of England putting the base rate up, and the bigger house, more expensive to heat, is also suffering from the higher energy bills. Whilst our market is generally highly resilient, it's understandable that people are putting the plans on hold in terms of moving up in terms of that top end of the market. It's a different story at the lower end of the market, because if you're a first-time buyer, then prices reducing slightly, and I'll come on to that in a second, is actually great news, isn't it, for a first-time buyer, because properties are becoming slightly more affordable for them, and you've got to consider what the alternative is. So if you're in rented accommodation, it's not like your rent is going to get any cheaper. In fact, landlords are putting rents up because their mortgages are going up as well. So we're seeing lots of activity, in fact, normal kind of levels at that lower end of the market. It's just that top end that is stalling at this second.
You've got the kind of ancillary costs as well that you sort of suggested there with heating and lighting, but we shouldn't forget about house insurance. We shouldn't forget about stamp duty, and that might be something that perhaps is still in favour of first-time buyers. Because what is stamp duty? When's that come in now? Is it still $500,000, or is it have they varied that a bit?
Yeah, I mean, it's so generally first-time buyers in this area won't pay stamp duty. Now, what caused the property spike was the stamp duty holiday that the government introduced off the back of COVID. So they did that to try and stimulate the economy. Okay, but that really had an unintended consequence in some ways, because property prices off the back of COVID rose by over 20%. So if you were speaking to me at the beginning of 2022, we're in a situation where there were over 20 buyers registered for every one house for sale. So prices were getting sold unseen, and things going from way above the asking price, overheating, if you remember. Okay. So it proves the resilience of the market, that even though we had this incredible spike, which was caused really by this stamp duty holiday, and people that were buying in 2022, which possibly weren't ready to buy, but they did anyway. It shows how resilient it is that the property prices only dropped by 2 or 3% since then. So hopefully for first-time buyers, the prices will come down a little bit. But the correction really has been nothing like the spike.
It's interesting, isn't it? Because mortgages, I know nothing about this. This is your field, but so much of the country's economy and its success and its future success seems to be built on people buying houses, because they do tend to kind of hold their value. They do tend to increase in value. Am I right?
Yeah, absolutely. It's most people's only show of wealth, isn't it? People don't have the money in the bank that they used to do, and not as much in pensions as they used to. And there's definitely kind of a feel-good factor that goes along with that as well. There's a real supply and demand problem, though, because we just don't build anywhere near enough properties. As simple as that. So a month or two ago, the government scrapped that target of 300,000 new homes. They never actually hit it.
No, got nowhere near it, did they?
So the last time we achieved 300,000 new homes in a year was 1977. But of course, the demand carries on because people don't want to rent generally forever. And if you look at property prices versus wage inflation over the last 20, 30 years, there's just no comparison. In fact, most applications that we do tend to be now 2 people on it, because we need 2 sets of earnings to justify those high property prices.
Malcolm Davidson is the Hull money man, or from Hull money man, and we started off the conversation perhaps by asking about whether or not it's a good time to move, and what you should do about remortgaging. And if you're lucky enough to have something already tied in or fixed in at a low rate, that's great, but they're not going to last forever, are they?
No, unfortunately, and this is why the inflation is proving a little bit sticky. So we've had 14 consecutive base rate rises now, but most people with mortgages are insulated against that because they're in the middle of their fixed rates. So they're seeing the prices go up in the shops, and the weekly shop, they're buying the same stuff in the same basket, but it's more expensive. They're noticing that, but it's not until those mortgages come for renewal that they're seeing that big increase in their monthly payments. So the last time this situation occurred was in the early 90s, but most people then were on variable rates of interest. So it was an instant hit. As soon as the Bank of England put the base rate up, the mortgage lenders passed that on to their customers, and that had the effect of cooling the economy. There's only a small percentage of borrowers on variable rates, and it's just those ones that you've got to feel sorry for now that are fixed in at 1%, 2% or 3% that are now looking at a mortgage rate, which one many of the listeners might say is normal, like a 5%, 6% rate, because some of your listeners will remember those. What those listeners have to kind of remember, though, is this incredible spike in property values. So a 6% mortgage rate now probably feels like 10 to 15% because you've had to borrow more to keep pace with the increase in property values.
And I do wonder if it's a younger generation of house buyer that's really potentially going to get stung here. Now, I am of the generation that can remember those higher interest rates, but if you kind of signed up to a deal and perhaps your monthly payments have gone up by £600-700, or likely to go up by 600-700%, or £100 rather, that's a lot of money to suddenly find in your budget, in addition to everything else that's costing a lot of money.
Yeah, completely sympathise with that. We've seen the odd customer with that kind of size increase, but more typically it's £200 or £300 per month. And all those borrowers can be doing is get prepared, because the last thing you want to happen is to drift onto a bank's standard rate of interest, which might be 8%. Okay, so you can lock into a new deal with your current lender up to 6 months before your new one, your current one finishes.
So you can start negotiating now.
You can, right. And you can obviously shop around other lenders as well. Now, most lenders, but not all, most lenders will let you cancel that product switch prior to your deal coming, the actual date for renewal. So you kind of get a second bite of the cherry. So you could lock in now and have another look, not at the very last minute, but maybe a month before your deal finishes. And if inflation finally does come under control and mortgage rates become a little bit lower prior to your deal actually coming up, then you could switch it. However, with the Bank of England base rate last week, we did hear a new piece of commentary, and that was the first time we've heard them say that the interest rates are going to be remaining high, possibly for a couple of years. So in other words, they're not going to just start putting interest rates down just because inflation starts coming down. They want to take a longer look at it. So that was an interesting narrative for them, and perhaps people looking to get on the property side should take heed of that, because it's not like necessarily that mortgage rates are going to get much, much cheaper in the near future.
I noticed that, and I also noticed that, excuse me, I have a little cough here. I also noticed that, if we went back 10 years or so, there will be much more parity between perhaps what we do with interest rates here and what the Americans do, because it's a big international globe and money flies around the globe, as we know. But we do seem to be kind of diverging and going off on our own route a little bit. And is that because we've got the inflation problem that we're struggling with and the Americans don't?
Well, they have struggled with it, but they were a little bit more aggressive than us in terms of putting the rates up. So I think we were a little bit confused here in terms of what was happening off the back of the COVID, how much of that economic growth was caused by the pent-up demand in the economy. So the Bank of England was much slower than the Fed at putting the base rate up, and that's why our inflation is proving stickier than theirs. And I think theirs is underneath 5% now, so much better under control than ours.
So would you reckon, if you were looking at it, perhaps no more rises, or perhaps another 0.25% to be had? What are you thinking? Yeah,
that's what the economists are saying, but don't listen to the experts because they get it wrong all the time.
No idea. And if you were thinking about moving, if you were looking at where you and your family might be in 6 months or a year's time, what are we doing here? Obviously, we're going to look at figures, we're going to look at our own financial planning, but hold off, go for it. What would be your sense generally?
I think generally waiting turns out to be a bad idea. At the end of the day, yes, there's the money side of it, the finances, but more than anything, this is a family home.
Yeah.
So that's got to come at the forefront of your mind. And if you can afford, if you can find a mortgage that's affordable, there are other areas. If you go down that bank statement every month, normally most of us have got subscriptions in there that we're not using.
Little bit of,
and that wiggle room. And that's what we're finding on these renewals, that it is bad news for literally every customer that we're talking to. That everyone wants to speak to me, no one wants to speak to me at the same time, because we're just delivering that bad news in terms of the higher mortgage payments. However, we're not seeing that many people sort of struggling to the point where they can't afford it. They're just having to tailor their outgoings accordingly. And of course, that's what the Bank of England wants to happen to get the inflation back under control.
It's interesting times we live in, Malcolm. Great to catch up. Malcolm Davidson, how do we find you online?
At the website hullmoneyman.com, or you can find me on all the social media.
Very good. Thanks, mate.